Okay, I'll confirm and head out. Okay, you guys are live. All right, good luck, boys. I'll be watching.
Oh my, look at QQQ and SPY. Shit.
Jose, are you in that?
Is the only thing that's right now shared just the screen? Like, is there a way we can also share like the gallery of people so people can also see us talking?
Unfortunately, those are the limitations with Zoom. It's either the screen share or it's the gallery, not both.
Can we like live stream as a group through YouTube?
Not to my knowledge. I know there's probably some custom solutions we could look into, but
Interesting.
Zoom is the easiest for now. Yeah.
Interesting. Cool. Good to know.
Okay, I think we are good to go.
Can someone also just double check and make sure that on the live stream side on YouTube, everything's coming through with the sound and everything? Like the gallery of people so people can all.
Yeah, I'll check on that.
Yeah, I'm on right now. I can hear everybody. There's a little lag, but I hear talking Jason.
Cool. I guess we'll get started in just a minute then.
I'll record it on my end as well, and then we can potentially re-upload that later, just to ensure we skip this initial part.
What a close, huh?
For real.
Nice push.
Yeah, the whole Russia thing is ridiculous. And their whole entire economy is absolutely screwed right now. Cool. Should we get started?
Yes, let's take it from here, Jason.
Yeah, okay. Awesome. Well, welcome everyone to our second OptionsSwing live stream. And my name is Jason. I'm the founder and CEO of OptionsSwing, and I'm excited to kick off the session with you all. It's been over 2 years since we started this community, and every single year we do continue to make a lot of progress, whether it's growing our Discord community or kind of the products that we've released over the past year. And as I like to do with each one of the live streams, I do want to take a moment first and foremost to thank everyone who's watching for being a part of this community, being engaged with us, kind of wanting to learn more and more about trading and personal finance. And it's impossible to do what we do without the support of all of you guys. So really thank you for all of that. One of the exciting things that we're going to be talking a lot about today is the OS Flow. OS Flow, for those of you who are not familiar with it, is a solution that we've actually built in-house that uses the data streams and the OPRA, which is the Options Price Reporting Authority's market data. And we use our algorithm to kind of find very interesting trades that are going on, allowing us to, find, again, opportunities to make money, at the end of the day. So with OS Flow, we have this really nice version 1 that we released last year. And this year, it's really going to be a large focus of ours to continue updating and making that much better, so that it can continue being more mobile friendly, give you much better data, and the algorithm gets better and better. But without further ado, I'm excited to introduce you all to the rest of the amazing people here that make everything possible at OptionsSwing. And the first person that I'll introduce and hand things off to is Sime, who's our leader on the operational side. Sime, go ahead and take it away.
Jason, thank you so much for that introduction. And I'd like to take a moment to thank everyone for joining us today. We've got a fun, exciting session packed for you guys. And I'm going to kick it off talking a bit about the macroeconomic updates, what's going on in the world, and touching on some fundamentals and how they're affecting the markets. So it's been a crazy day. We were talking about it just as we kicked off the session, that what a close from Triple Q and SPY. Triple Q, even as you can see from our slides, those numbers have been updated over the last just 20 minutes. It was down 0.1% for Triple Q, down 0.65% for SPY, and now Triple Q closing in the green. And this is a major comeback considering futures last night were down over 2 to 3% across the board. And we've seen a bounce, what I like to call a dead cat bounce across Triple Q, which is the NASDAQ index, SPY, S&P 500. And we've even seen the trickle-down effects into crypto markets as well. Now, what initially caused the futures to go down was the Ukraine-Russian tensions, as we've all heard. And after 5 days of raging conflict, we've seen NATO and the US come out and talk about imposing sanctions on Russia through SWIFT transactions, alongside other financial sanctions on the Russian elite, their governments across the board. So with that being said, the main things, what are the main catalysts that we're looking at for these days? Right now, we have seen Russia and Ukraine come back to the table to resume negotiations and talks about how they can potentially dissolve this conflict. And if we see a breakdown of these talks, that might be a very negative catalyst for the market. And that's something we're keeping a very close eye for. Alongside that, we have jobs reports coming up this Wednesday. And with the market keeping a very close eye on that, we need to see the wage spiral stay in control, because otherwise, if that is spiraling out of control, what we're seeing are rising inflation concerns, which is going to push the Fed next week, the week after, who is speaking to potentially raise rates by 0.25 basis points. And this, alongside with the current macro environment condition, could once again push the markets down. So have we found the bottom yet? That is yet to be determined, but based on the current outlook from today, it seems like shorts were being covered. Market had a bit of a revival. Now, due to all this conflict, right, my personal opinion is that this is going to lead the Fed to dump some mortgage-backed securities to reduce their balance sheet while the rates drop because of the war. And this can be seen on the 10-year Treasury bond yields as well. And this could be a major catalyst for crypto as well. Bullish or bearish, yet to be determined. It depends on how the Fed comes out and approaches this. Another very interesting thing that we've seen is oil spike up over $100 again. And this is putting a lot of pressure on tech companies and EV companies, in the sense that they're coming up with more solutions to diversify away from fossil fuel-based economies and supply chains. And with Russia being 42% of Europe's energy supply, that will have massive impacts down the line on both these energy and gas companies. Alongside, it will trickle down to other areas of the economy, right? So we're keeping a very close eye on these. We got CPI coming out on March 10th. That's going to be a big indicator. Once again, month over month, year over year numbers have been excessively high, some of the highest numbers we've seen in 40 years. And this has pushed the stock market continuously on a downward trend for the last almost 10 weeks now. In terms of specific stocks, some really interesting trends that I noticed were traveling stocks, reopening stocks, banks, and safety plays were taking a bit of a hit, and they're not necessarily doing the best. And what I make out of this is people are selling out of these as they don't want to spend as much money. One, because they've gone out, they've had their fun, they've done their excursions, and now they've started to stop traveling as much due to these rising geopolitical concerns. So with that, we're seeing these funds moving to more depressed tech stocks that have taken majority of the beating, and maybe even into crypto. So names like Tesla popping up 7% on day, Microvision coming up 10%, Upstart, Neo, Palantir, even Coinbase coming up 7%. These are some really rapid spikes that we saw today. So we're watching out for new shorts being opened as well on these positions, because if we see one of the negative catalysts that I talked about earlier come to play, then we anticipate that more shorts will be open on these, and we could see further downside. With that being said, we are also keeping a close eye on the solar industry, because there's expected EV tax credits and alongside green energy credits that might be coming in. In terms of major upcoming events, we have Biden speaking tomorrow at 10 a.m. to give us updates in the US briefing on what's happened this past weekend and where the US and its allies stand on the conflicting issue with Ukraine and Russia. And we have Powell coming out and speaking on Wednesday and Thursday as well to address the state of the economy. So with that being said, let's move on to the next slide. One really interesting trend I picked up and want to be sharing with you guys is this chart right here. So as you can see, the blue line represents the federal funds rate, which is at what rate the Fed issues their bonds. The purple line is a measure of inflation, and the yellow line is a 10-year bond yield, which is a perfect substitute for mortgage-backed securities. Except for right now, the yellow line has always stayed above the purple line. And this has been a macro trend, not from today, but since the early 80s. And what you can see is the blue line strength and correlation has completely decreased over time with this. And like we said, the blue line is the federal funds rate. So what is that telling us on a macro basis? It's telling us that despite the Fed being such an influential player over the last 2 years with all its injecting of liquidity and providing support to the markets, the effect that it's having now in the markets is reducing over time and becoming more minimal. And this is to show that the Fed is kind of saturating how much it can do in these markets, and especially how we're coming to an inflection point that once the Fed starts raising interest rates, cutting off buybacks, and then potentially reducing its balance sheet, it'd be really interesting to see how the market corresponds to this with the amount of debt that we've accumulated over the last 2 years, because these numbers are absolutely unprecedented and never seen in the history of the United States. So we can see a trend divergence, which means we have a big move coming and looming on the horizon. So that's something we're definitely going to be keeping an eye out for and seeing how that affects the stock market. So thank you so much. Those are my updates on the macro side. I'm going to hand over next to one of our analysts.
Awesome.
Kabir.
Thank you so much, Simon. So we just had Simon Bassi give us some fundamental updates, and Jason, our founder, give us the introductions. Now I'm just going to give a quick minutes. We're just basically going to talk about, how recent events have been affecting markets, both crypto and stocks and options. And I think, Dan, you wanted to talk about how, if the war, is it priced in? And the ongoing conflict, is it priced in the market? Is that something you'd want to share with us and share your screen real quick?
Hey guys, what's up? Dan here. Yeah, so if we let's just look at SPY real quick. We had this whole downside throughout the first couple of weeks of 2022, given the tensions in Russia and Ukraine. So we can kind of call this buy the news, sell the rumor, or sell the news, more like it, or buy the news, because it was the opposite. So the market bounced as soon as Russia kind of did invade. We saw a big capitulation volume, as you can see right here. You guys can see my screen. We saw a lot of volume. We saw a massive dump to the downside, but then we saw just the biggest recovery we've ever seen since March 2020, right? We saw a 6% move, both upside, downside. And then today we saw more follow through, especially into the close. So I don't want to call it a dead cat bounce just yet, just because we have to let all these events come into fruition. Especially if we look at our heat map, kind of see what stocks were affected today. If we look at what was strong, we see oil, given the tensions again. We see defense, LMT, NOC just did really crazy moves today. Tesla announced that one of their factories is opening today. And that's kind of a wild evaluation, an 8% move, given that news wasn't already priced in, even though we knew that that factory was being built. An 8% move on saying that it opened, or it's going to open soon, is kind of crazy. And then I want to kind of talk about financials for a little bit. Kind of want to say, why are they so weak when SPY is showing some strength? And I think it's kind of the market's trying to price in that the Fed is not going to, they're going to slow down on their rate hikes. They're going to say, you know what, given the market volatility and the tensions in Russia, maybe we should wait, on these rate hikes. And I think that's why financials are underperforming in the market right now.
And yeah, adding to that point, I think also, the fact that Russia's, because of the sanctions, they're not going to be able to transfer money through the SWIFT. I think that's kind of leading us into this new phase of financial freedom where, we might be using cryptocurrency to get money in and out of Russia. And same goes for Ukraine. I think, and that would be a perfect segue for maybe, Will, you want to, tell us how the war kind of impacted Bitcoin and give us some cryptocurrency outlook on that front?
Yeah, sure. Here, let me share my screen. How's that looking?
Looks pretty good to me.
Cool. Okay. So it's an interesting time right now. We've almost fully retraced two pushes towards all-time highs. So we have an origin of a really strong move up here. This was, the beginning of 2021. Obviously, we dumped in May. We came right back down to it and used it as a springboard to make a new all-time high. So your, classic price action analysis of this is that, okay, we deviated above. Now we're looking for us to deviate back below. That would put us under 30K again, with the assumption that we'd hopefully get bought back up. Now, that has been my plan for a while, but it's starting to change a bit today. And let me zoom in a bit and I'll show you why. I'll get rid of all this. So we've been in a pretty clear downtrend. We're doing lower highs on the way down and lower lows as well. That changed today, actually, where we, on a lower time frame, which I'll switch to in a little bit, we pushed through and we started establishing an uptrend. Now, the macro picture here is that we are still in a downtrend. This is the 3-day chart. That changes if we reclaim the yearly open, which is around 46,000. That would put us up here into a higher high up here. And that would be the signs of a higher time frame, trend reversal. So let me punch in here to the 4-hour chart. We've also been on a downtrend here. Obviously, we have lower highs on the way down and lower lows subsequently. However, we punched through recently and made a higher high here on the H4, a really tiny higher high. We were then looking for a higher low, which we got here. And so now we are in a confirmed uptrend on the 4-hour. You see we have a higher high, higher low. We are anticipating a higher high somewhere up here. I'm thinking we'd likely find some resistance around the 42,000 level. And then we'd hope for another higher low, ideally around here. So the big picture is that we're still in a downtrend. However, the lower timeframes are breaking out. They're showing signs of turning around. And I think and today is also the monthly close. So I think we have the recipe here for potentially a couple weeks of an uptrend going into March. It's tough with all the macro stuff. You can't really anticipate it. We're getting big moves in both directions every day. But, if you're a high time frame trader, you're just buying on dips and you're going to keep holding. If you're a low time frame trader, there's actually a lot of trade opportunities here. You just need to be, willing to change your bias. And I think altcoins are looking pretty good as well. Now let me switch to this one. Let's look at Ethereum for a moment. A similar picture on the high time frames. This is down here is the range that we formed during the dump in May through July. We came and we tested the midline. We're making higher highs here as well, higher lows. We have yet to make a higher high. Once we do, we shift bias and we're high time frame bullish again. So just to recap, Bitcoin, Ethereum, low time frame bullish, high time frame bearish, but willing to change to bullish once we get some more confirmation. And also, I think that's just on a quick segue. This is like the perfect scenario for Bitcoin and crypto to start moving upwards again. I mean, this is like the dream scenario from the founder, Satoshi's vision. It's like we've got geopolitical uncertainty, financial restrictions, and people losing sovereignty over their currency. So this is the time for crypto to shine if Bitcoin breaks down here, I think the Bitcoin experiment has failed. I don't think it's going to happen, but it's always a possibility. That would mean we lose 20,000 and we'd be in a multi-year bear market. And that's all I got.
That was awesome. Thanks a lot, Will.
Yeah, I was going to comment on that last part with like Satoshi. I always kind of thought crypto was like pretty dumb, not gonna lie. But like this whole point where like people can actually send money and stuff just because banks are basically like shut down. Like it is actually pretty cool, like seeing that in action. You know?
Yeah, absolutely.
Not only that, but you can see even in Canada where they are basically blocking people's accounts and stuff, even without court orders. So imagine that, you know, it's not only what's happening in Russia and all of these billionaires getting their assets frozen. It's happening in other parts of the world, you know, and so far it's playing out good, but like Will said, it's too early to tell.
Yeah, I was actually pretty frustrated last week because Bitcoin was dumping harder than equities, you know, and it was like, what? This is like the perfect time.
This is what it's for.
To outperform, you know, and it was, you know, being traded as just like a high beta play on like SPY. So it's nice to see it starting to turn around a bit here, but you know, I'm skeptical. I'm not overly bearish, but I'm not overly bullish yet either. We still got a ways to go before we lock in a high time frame uptrend.
So, Will, very quick question for you. I don't know if you've noticed, but recently Bitcoin, the way it's been moving, it feels like a very high beta tech stock. And it seems to be moving more and more in line with the market rather than acting like a risk-off asset or inflation hedge or some of the narratives that we heard initially back in 2021. What do you make of that? And do you think this is a good thing for Bitcoin, or is the asset is more maturing and people are looking at it as they would look at any other equity? Or how are you perceiving that? I'm curious to hear.
Well, you know, I think that, yeah, so like the decoupling sort of thesis that Bitcoin's going to decouple from, you know, the S&P and form its own trend. I think we're a long ways away from that personally. You know, Bitcoin is primarily being moved by traders, not investors, you know, not the people that are storing value in it. It's, you know, people who have enough Bitcoin to move markets, and it's being traded like any other, you know, liquid kind of asset with a chart. I think maybe there is a point in time when it starts to move way slower, but I think we're a ways away from that. You know, I'm not saying we're early. We're definitely not early, you know, but, you know, I think there's still a lot of volatility that can be squeezed out in both directions. And I think that will taper off probably in the next 5-10 years, and it'll start moving real slow like an index. You know, but the volatility is where the money's made. You know, it's like people aren't making retirement money trading gold anymore. You know, they're making it trading crypto. So it's like
Peter Schiff in shambles right now.
Yeah. You know, so it's I welcome the volatility. I think it's going to last for a while, but you know, we're definitely not early by any means.
Thank you for your insights, Will.
Awesome. Dan, is there anything that you still wanted to show on your side of things when I'm sorry if I cut you short. Is there any like sign of reversal that you're seeing in, you know, SPY, or are we making a recipe for an uptrend in the financial markets as well, just not with Bitcoin?
Let's see, let me just look at something real quick. Share my screen. You didn't cut me off. Let's see. I don't want to say we broke the downtrend just yet. I think we're still in a correction phase. Let's see. Let's measure this. Where is it? Here we are. From the top to where we're closed. Oh, we're not in a correction anymore. We did drop 10%, and that's a correction. I knew QQQ hit a bear market, but I did notice in flow that I want to point out. I did see some tech stocks leaps being opened, which I pointed out when we first opened our crowd call, which was the capitulation day, which was Thursday. So I saw some leaps for crowd being open that day on the day that the S&P opened down -3% or 2%. It went green. So I am seeing some more confidence on the flow side. on growth names. I saw some Zscaler leaps, some crowd leaps, more like in cybersecurity. And I think it has a lot to do with the Russia tension. But I know crowd moves with indices, so it's not going to be the only thing that moves. I just want to point out there's more confidence in the flow for the long term on these names that have been crushed these last few months that are down more than 50% from their highs. Other than that, I mean, I would open some leaps and leave some room for averaging down. But other than that, I'd still play it safe until we break this downtrend.
Yeah.
And I just want to add to that that a couple of growth names and stuff, they're actually reporting good earnings, like Coinbase and like Workday today. I think that obviously there's a lot of companies and stuff that are not going to be in here for the long term, but there's obviously some companies like Coinbase which are probably at the point where we should be buying them.
Are you guys like not worried about the Fed like offloading their balance sheet?
I don't think they're going to be able to with this geopolitical stuff going on. I think.
Yeah, like I don't think they'll dump it, but like there are a bunch of like short-term bonds that'll expire, and then I mean I don't know how fast they want to like actually reduce the size of it, but like
Yeah.
Like Kevin's been talking about it for like the last couple of weeks. Like he thinks massive dump potentially. I mean that was pre-Russia, but
yeah, right. I mean we've got this FOMC coming up in March too, I think, right?
Yeah, it's in March.
Yeah, so that should give us a good indication of where we're headed. So I mean, I'm not loading up on long-term stuff here, but that's just me. I'm a bit more risk off with stocks. I'm more focused on crypto.
Trading,
and I am loading up on some long-term crypto stuff, but like not full deployment yet.
I'm kind of the same with stocks and options right now. With all the Russia tension, I've just been taking a backseat, doing my TA, eating my popcorn, looking at what's going on, but not really going long-term in anything but crypto, just the ones that I feel have taken a big beating and are now showing some signs of bottoming out.
I wish I like understood crypto the way you guys do. Like if I could just invest in like a will crypto ETF, I would, but because like to me, like my brain just does not get it still, but
yeah.
So beyond just like trading like crypto coins and stuff like that, Will, obviously there's projects behind it that really, make it rise and fall. Out of like the crypto projects that you're kind of looking at and you're following, what's your like favorite one and why?
He's Juno, right?
Yeah, Juno. So let me share my screen. So I mean, Juno is part of the Cosmos ecosystem, which is Atom is the token. Let me pull it up here. Cosmos. So Cosmos has been really strong during this correction. It has this really strong base here around in the low 20s. It's actually a really strong base here in the low like 25, 26 region. This is where I added just a couple of days back. It was a retest of this 23, and look how quickly it was just snapped right back up. So Atom is sort of like the internet of blockchains. It's a system that will allow. Well, Juno in particular, I should say, is a smart contract deployment software, and that has been doing.
And smart contracts being for like
just any kind of apps. I mean, marketplaces, NFTs,
Exactly.
DeFi applications, really anything. It's like just a template that people can use to deploy, permissionless. That's what's the key about Juno is permissionless. It doesn't need an approval by any board. So, I mean, there's going to be a lot of scams on it like any other network, but it is here. Let me show this chart here. This is the Juno year to date. Everything's been in a really massive correction, equities, all of crypto, and Juno is up about 300% since the start of January. Well, Bitcoin's down, like 20% still, at least, probably, I think more. So, this is how I made some decent money on the last push in crypto too, was looking for names that were showing relative strength during corrections. Juno was the first one where I've actually read some of the documentation, and I'm bullish on the concept itself, not just the chart. Because I mean, anyone looks at this chart and they're bullish on it, but so it's brand new. It's really exciting. And it's got a lot of upside, I think. And it's more of a passive income type play. I'm just buying it and I'm staking it. And there's a 1 month unbonding process once I want to sell it. So it's not really something that I'm like buying low and selling high. I just keep buying it on dips, and it's one of my longer term holds. And I think it's one of the no-brainer plays of this year, honestly.
Nice. So you're thinking that Juno has a lot of room to run for the rest of the year too?
Oh, absolutely. Yeah.
Yo, Jose, you hear that? Make sure we get some of those.
I mean, just like worst case scenario, like hopefully it's not like a VIX for Bitcoin,
Yeah.
That would actually be pretty unfortunate, but
it's the Cosmos ecosystem as a whole has been really, sturdy during this correction. It's not just Juno, but Juno is the leader of that right now. And it shows that that's where people with large, amounts of funds are kind of stockpiling during times of volatility. I think if it's outperforming now during a correction, just imagine what it'll look like when we're, back in an uptrend again.
Awesome. Yeah. Thank you.
We were talking earlier about, flow and how we've been using that to figure out where the market's kind of headed and make some of our, our thesis. Jose, is there, some of the plays since the last stream where we used OS Flow and Algo to kind of find some awesome plays or something that you want to talk about? Some of our trade highlights?
Yeah, I actually highlighted a couple of plays from today. Let me share them. And okay, there you go. So one thing that I want to point out, obviously everyone keeps on asking regarding the OS algo and stuff and how to use it and whatnot. One thing that I want to make really clear is that it isn't a tool just to be following blindly. It's meant to be just an indicator for your trades and whatnot. I highlighted basically 3 plays from today and the way that I would approach the plays. So for example, today at open, we had this Teladoc 80 call, right? The stock had opened up 10%. So we really want to question ourselves, it's pretty overextended from the 90 MA on the 15-minute time frame and stuff. So we really want to question ourselves, do we buy it here? Do we wait for the pullback? Do we wait for a break from high of day and whatnot, And honestly, like this play, like I wouldn't follow whatsoever, obviously, because it opened up 10% already and stuff, and it was pretty overextended. So what we want to do here is we want to wait for a pullback. If it happens, if it doesn't happen, we go into the next one, but we really shouldn't be buying plays that are overextended in a sense. Let me highlight this one as well. This one was Square or Block. So this flow came up as Square was breaking from the pre-market high. We know that Square reported earnings last week and they actually did amazing, So we could be, and if we were looking at Square and everything, we were probably bullish, and what we want to do on this one is we want to basically trade that breakout from the high of day. Once it broke out from the high of day, as you see, it retraced back to a 90 MA, but there was no reason to sell it, It just kept going up on the day. It was a big win. Honestly, as you guys know, we're not going to have much time just to analyze these trades and whatnot. So what we want to do is, if we don't really understand it, we want to move on to the next one. We cannot be following them blindly, honestly, because there's no way for us to know if it's if the trade is being sold to open or bought to open. And another one that I wanted to mention, this one. went up. And okay, Palo Alto Networks. Palo Alto Networks, we had some flow today in the morning. It actually went, they ended up buying around 940 or something. They ended up buying some contracts. They were betting on a 10% move. They ended up paying $1.60 for the trade. If we go to Thinkorswim, we can track the trade. We know that that most of the contracts that are popping up on the algo are trades that are being opened. And if we go to Thinkorswim, we can actually look at that contract and see the volume, as we see in this picture. We can see when they bought the contract. We obviously look at the stock and everything, and even though the market was drop a little bit today and stuff, Palo Alto Networks was actually like outperforming the market at some point today. So we really want to look at these names and stuff and try to chart them and try to understand the play. So Palo Alto ended up breaking from the high of day. It made a new all-time high today. The contracts, as we can see, they were never traded again today. So they're most likely still open. They haven't closed this trade. And another one that I wanted to mention, it's this one, Oxy. This trade went up over 200% today. If we see here on the hourly, there was a slight downtrend, and it ended up breaking that downtrend. And when it was breaking that downtrend, that's when the flow came in, right there near 40.33. So obviously we know that we have all this situation with Russia and whatnot, and that obviously the more war and stuff that we have, the more it's going to affect the oil price and stuff. We also had above average volume and whatnot. So it's a play that, yes, we can follow. As we can see, Oxy never went down below the 90 MA on the 50 minutes, so there was no reason to exit the trade. So yeah, those are a couple of the names that pop on the algo today, and I just wanted to mention that we do have to, honestly, like, we do have to have a sense of understanding of these trades. We cannot just follow them blindly. We gotta set our stops. Our stops, like, they shouldn't be based like on a percent. They should be based more on when we think like the trade doesn't really make sense anymore. Like in here, like if we see a rejection from that pre-market high or a rejection from this downtrend, then we know, that the trade, it was probably sold. But what we've noticed is that winning trades on the algo, they don't really tend to go below 50%. So that's more or less where you should be expecting, to have a stop, like if you have if you follow a trade from the algo.
So Jose, quick question for you. For people who don't use OS Flow right now and don't know much about OS Algo, could you talk a little bit about, what it is in more detail and kind of why you think it's important that, it was built and why, people should use it?
The algo?
Yeah. And the flow as well, even like the flow app that we have with all the market data.
It is important indeed, because obviously it's going to tell us what other players in the market are doing. The real special thing about the algo is that the algo tries to focus on trades that are being opened, so that means that they're either buying to open or selling to open. So all we have to do is basically analyze it a little bit, and then with our TA, we can increase those chances and 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 see what they mean when we see a trade, you know.
Yeah. And I definitely look forward to like working more on that product this year with you, because I know like we have a really solid like foundation for it, but there's definitely a lot of potential for things that we could add into it, you know, UI updates and all that kind of stuff. So it's going to look better and better over this year, right?
I know, obviously, yeah. And the more data and the more that we look at it and stuff, the better we can make it. Another thing that I wanted to point out is that not every trade that goes south means that it was sold to open. You know, these people, they make mistakes as well. You know, nobody's gonna be hitting like 100% of the plays. So obviously, some of these trades, you know, they're thinking about something and it doesn't go their way, it goes south. It happens, you know.
Yeah. I think sometimes when people see a lot of money in a trade, they assume that, okay, this is how it has to go. But, you know, even people with deep pockets make mistakes.
Yeah, 100%, 100%. That's why we gotta know what we're buying, you know. If we basically follow those trades blindly, we don't know what we're buying, and we have to know what we're buying.
Yeah, I think a very important tip for people who just start using services like OS Flow and Algo is that it's not a signal, it's an accessory for you to use with your technical analysis and see if your analysis matches up with what you assume is bought or sold. And then, you know, using it like the way you do is a very good example of how to benefit from it.
Yep. And Warwick, I've seen Warwick, he's been taking a lot of trades from the algo as well, and he's been doing well. And the reason he's been doing well, it isn't because he's following them blindly. You know, he's taking just 1 out of 30, but that one is the trade that he understands. You know.
Yeah, like it's. I almost feel bad saying like it makes it so easy. Like, you know, I don't have to. I mean, sometimes like a lot of time I read the chat to see like what's moving and what's not. And then I'll watch like Flow Algo, and then I have the OS Algo tab open. But like the OS Algo, it's like, you know, if 9 times out of 10 those are purchased, and then I see like some repetition like AMD today. Yeah, it's like, of course I'm gonna pull up the AMD chart, and then it's just a matter of like waiting for my entry. And I just buy the same contracts they bought, and then, you know, it's pretty straightforward.
Yep.
So I got a question for you guys. You know, whether Jose, you want to answer, or anyone else, you know, wants to kind of chime in, but we have a question in the YouTube live stream chat, and Jason's asking about, you know, first and foremost, it takes a little while for him to kind of analyze the algo before kind of getting in on a play. Sometimes, you know, anywhere from 10 to 15 minutes. And so, you know, and that obviously is time, you know, is opportunity. And so after 10, 15 minutes, that entry, you know, or spot price might not be the same as, you know, what it was, you know, before. So what do you guys like recommend in terms of helping you, one, like speed up the process of doing due diligence, whether it's technical analysis or, you know, anything like that? And what are some of the key things that people should be looking for, you know, when they're kind of analyzing some of this flow and algo data that's coming in?
Yeah, in order to analyze it fast, in my opinion, what you gotta do is basically every night, like, you know, or even better, every morning, you know, pre-market, chart the popular names, you know, Facebook, AMD, Apple, you know, those are gonna be popping up on the algo every day, you know, Nvidia and whatnot. So maybe have those charts already ready so that when the market opens and you see a trade on Apple and whatnot, you know, you already know what you're looking at.
For me, what I do is like I just always have the 8 EMA on literally every chart, and then I also have VWAP. So it's like if it's puts that come in and then I'm just now closing below the 8 EMA, to me it's like that takes, you know, 5 seconds to understand. Okay, that's generally pretty bearish, so I'm just going to buy the puts. Yeah, I think 10 to 15 minutes is, I mean, you know, it'll come with time, but like that is too long in like a game where, you know, seconds can make all the difference. So I think find some sort of indicator, and then that basically makes the decision for you, and just kind of rock with that.
Yeah.
Cool. We have another question in the YouTube live stream chat as well, coming from Alex this time. And he's asking about, with algo specifically, I think, is it more accurate for swings or for day trades? And what do you guys usually use it for? Like what kind of trades?
It's pretty safe for earning sometimes.
Honestly, like from the data and stuff that we have gathered, they obviously do better as day trades. You know, whenever you swing something, there's always gonna be less probabilities that your trade actually hits. You know, you don't know what's gonna happen, you know, after the market closes and whatnot. So it's meant for day trades indeed.
And Ward, did you want to add anything to that? I think you were saying something earlier.
No, it's pretty sick for earnings sometimes. Like I think back when Netflix dropped and PayPal dropped, like the algo, like those trades did come through on there. So I mean, I probably would have missed PayPal if it wasn't for that. But yeah, I don't know. I mean, like sometimes it's good for swings. Like right now we have a BX swing and it went to like 65% Friday. Right now I think it's played flat, but yeah, that one's still going well, but I like it. Most of the trades are day trades. Some of them, if it's like a week following for the expiration, then I'd look into swinging those.
Cool. And Dan, thoughts on using algo or flow, just in terms of how you trade? Because I know you're obviously a big time trader here.
He is the flow, man.
I'm a swing trader. I only do swing trades. And what I use is our flow bots and our OS flow. Not so much the flow algo for that. I use ERs for flow algo because our flow bots don't catch these sometimes. And I always follow. I tell people I follow the stupid bets, like the ones that seem like too dumb, too far out the money, and the weeklies as well. I've been on a hot streak this last week, or last 2 weeks, I want to say. Just following this small flow. I want to say it's like I don't follow anything big. I follow weeklies that come out like 8% or more out of the money, and they're betting maybe like 30 to 40,000. And that's been my strategy for the last 2 years, and it's gotten me pretty far as a trader. But yeah, I specifically only swing trade. I look for momentum. I use ETFs. I use their holdings, and I track all flow across the board. Let's say if we see cyber ETF calls, and then we see crowd calls as well, then I'm going to play longs on cybersecurity. Or let's say we see XLF calls, and then we see some smaller bets on JPM, that I'm going to play the financial sector. So I kind of track ETFs and their holdings, and just really just dumb bets sometimes, and then sometimes they just hit, and then all you need is one big play to make up for the other small losses. Like crowd, we swung from last week today. The runners are up 500%. They made up for some of the small losses we had on some smaller swings. But yeah, I'm a momentum trader. I only swing. I don't day trade.
Yeah, like Netflix and PayPal puts covered this earnings season and next earnings season, and probably the rest of the year's earnings season. So
Exactly.
maybe another year too.
Yeah.
Kevin with like 400,000 on Netflix.
So we got another question in the YouTube live stream. This one comes from I believe it's Bryce, but it could be powered by Bryce, probably the latter. But with that said, he's asking kind of, this is going to be a little bit more for you, Dan, but essentially, and he's asking more about solutions, but I think this is more of just a general question. Like for people who want to do longer term trades, what is the best way inside of our Discord community to kind of find some of that information, maybe outside of equity swing, or if in equity swing, how could they use that channel a little bit better? But essentially, having a day job, it's not always easy to follow all the short-term trades that are going on. So, how do they make sure that they can kind of stay in tune with some of these longer swings? And I think that Dan I'll ask you that first, just being a swing trader.
Okay, so I want to kind of point out our XLE trade that we've been doing since the beginning of the year. We're just constantly playing oil and energy. And the reason I got into oil is not so much the technical analysis, but the flow that I kept on seeing. Just they're just banging on the ETF, which was XLE, and they're just hitting Halliburton, CVX, XOM, DVN, all these energy companies. And then you kind of look at historical data when we're in high inflation periods, and then high inflation periods reflect that energy stocks really get bought up just because they run hot with inflation, they run hot with commodities in general, and they have really nice dividend payouts. So we noticed that they're buying energy calls, long calls with a lot of time, with some pretty good size lots. So we've just been playing the pullbacks, playing the tops, just constantly just hitting this momentum trade. So if you're looking for some longer equity, I would suggest looking at flow, and then looking for multiple calls on the ETFs and their holdings, like I said, with 3 months or more time. Because when we saw it back in January, they were playing March calls for XLE, and those are deep in the money already. I think XLE is up more than 20% for the year, by far, really outperforming the entire market. And given these Russia tensions, who knows? Maybe it was like some insider trading that knew that there were some tensions out there and we're going to close some pipelines and whatnot. But definitely just look for some strong flow with equities, the ETFs and their holdings. Like, let's just say, like I said, XLF. If you see XLF calls for March, and then you see JPM, you see BAC, you see WFC, then we know we have a pretty high chance of hitting that swing trade.
On the note of like watching ETFs and stuff, a lot of like SPY and QQQ flow is like, you should just ignore it. Like, unless it is just like stupid 0 days, then pay attention to those. But a lot of it, like the $1 million orders, like that's all institutional hedging. So I think most often you should just ignore that.
I agree on that.
Good feedback. And we have another question in the room. Alex is asking around, stop orders and stuff like that. Do we mostly do like mental stops? Do we do, specific stops, whether it's like percentage based, dollar based? How do we kind of view that? And Jose, I know you earlier were kind of talking a little bit about that in terms of, looking at the trade and whether, the trade still makes sense, and then, putting in, stops there. But do you want to talk a little bit more about how you kind of use stops, and then maybe, anyone else who wants to kind of chime in on how they use stop limit orders and so forth?
Honestly, from my opinion and experience, I think that the best thing you can do, I'm not gonna lie, it has to be 50% stops. We're at the end of the day, we're playing, most of them are weekly trades and whatnot, and with this volatility and all, trades go south in no time. Then we have people saying, hey, I'm down on this position, whatever, and pretty really often, like, you see the next day that the trade is up like 100% or whatever, and so we just gotta go with wide stops, in my opinion.
Yeah, I agree. Either like a wide one like that, or don't use one. It sounds
Don't
like
use one. Yeah.
Yeah, like, if you're worried about stop loss, you should trade with less money.
Exactly. Yeah, that's gonna be the best one. Mm-hmm.
Yeah, I agree. When I used to day trade just stocks on momentum, pre-market and stuff, it's okay to have a stop because you're just gonna put it at, if it goes below support. But with options, some one wrong candle and then you're not gonna reach the same contract price, right? So, like, where I agree with you completely, like, don't have a stop, and if you're worried about a stop, trade with less money, because you shouldn't be risking in an options play where you're not willing to lose anyway, right?
Yeah, I use things like, I use the 8 EMA like religiously, so like that will be my stop loss. If it closes below and I'm in calls, then like I get out. But as far as like actual position sizing, like if it does go to 0, like I will be okay. There will be another
thing that I want to mention for people that buy 0 days and whatnot is, don't set a stop on that. You are gonna get a stop like as soon as you buy, 3 seconds later, you're gonna be stopped on a 0 day. So if you're buying a contract that is expiring the same day, just know you're risking like the full amount of the money. There's no reason for you to even sell at negative 80%, nothing, you know, that can turn around like really quick.
Yeah, for sure. And I think part 2 to that is that, you know, don't go all in on 0 days either.
Yes.
Okay, so unless we have any other questions.
Warwick, you got a question?
His favorite number is 8. You're muted. War.
I said that's going to be on Instagram. Do any of you guys know what Biden's State of the Union tomorrow night is going to do, or if it is going to affect the market? That's not exactly like my area of specialty, but yeah, someone's asking in the chat.
State of Union?
Yeah, apparently.
Not really. Honestly, as soon as this situation in Ukraine started, it's like everyone forgot about inflation and stuff and all the other problems.
Yeah, for sure. That's why I feel like something larger is at play here.
Yeah, I mean, I guess it kind of depends, like if he's just super bearish when he speaks.
I doubt it. I doubt it. As we have seen, you know, most of the states like are already like opening up. You know, even New York. You know, they're not requiring masks like indoor and whatever. So
it would be sick if he pulled a Trump and just like gave a bunch of shout outs to individual companies again.
He did do that. I think the last 2 times.
It just didn't move it that's the same way.
No.
Yeah, that was ridiculous. It was like Google 0 days, like went up 5,000%.
Someone was asking in the YouTube question, Warren, why do you prefer the 8 EMA versus the 9?
I mean, it's basically the same thing. I learned it from a guy on YouTube. His name is Rick. His channel is Fit Traders. But yeah, I mean, he's been trading for a long time and he's sworn by it. And then I've like back tested it and stuff, and it's worked well for me. But yeah, I mean, like 7, 8, 9, like up until like 12, like it's all pretty much gonna do the same thing. Lots of people do like 8, 13, 21 to get like an idea of it, but yeah, there's no real difference.
Another good one is using the 21 EMA on the 5-minute time frame.
Yeah,
I know a guy that does it, and he does really well, to be honest with it.
because of the kind of volatility these days, I use 8, 21 and 50 on the 5-minute, and usually like the break of the 8 EMA up or down is the start of the trend, and then if it holds the 21, that's confirmation for me.
Yeah. Mm-hmm.
There's an interesting question in the YouTube. What is one tip you would tell your younger trader self that took your trading to the next level and cut your learning curve? This is from Michael Domingo. For me, I think it's kind of blocking out the noise and just kind of don't follow the social trend. What everything is going to happen is kind of almost always the opposite happens. I was like back in March when we thought the S&P was going to keep dipping, just keep dipping to, I think we were betting on SPY 185. If I was back in March of 2020, I would tell myself, buy the dip. You know, like why would all these companies completely fail because of a pandemic that who knows how long will last? You know, nobody knew how long the pandemic was going to last. They thought it was going to last a couple of months. 2 years later, it's still here, and these companies are reporting record sales, record revenue, record EPS. So don't listen too much to Twitter. Don't listen too much to too much of the noise. I want to say, just kind of block out the noise, follow your charts, follow the flow, and just kind of really focus on the macro for swings and the micro for day trades.
Yeah, I would say doing less helps a lot. Like I would say like 90% of like my losses were just because I was like overthinking a trade or I was like over managing it. I mean, you could ask Dan, like you could vouch for this. There's so many of my trades where I would take profit at like 50% because I'm looking at it on like a 5-minute thing instead of like a 4-hour or 1 day. And then next thing you know, it's like 500%. And like that's some serious compounding that I've missed out on just because I want to manage my trade.
Yeah, all my charts are either on the daily or the weekly. When I post ideas or trades, it's never on the 15-minute, just given that I'm a swing trader and not a day trader. And it kind of falls into one of the questions that Powered by Rice is asking. Any chance we can get an explanation on your swing trades, Dan, on weekly basis or just market direction as a whole? I don't want to say I'm a perma bull, but I look for strength in the market, which leads to strength as in a sector that's going up. You know, if S&P is dipping and energy is going to go green or is green and ripping, that's what I'm going to play calls on. You know, I'm looking for momentum, looking for relative strength is what I like to call it, or what everybody calls it. And that's what I focus my swing trades on, just sectors that are showing strength in a weak market. And right, and so far it's been XLE, some agricultural stocks like CF that we played. What are we playing? Cybersecurity is showing some real strength right now, so that might be my next focus. Other than that, yeah, so momentum and relative strength. So just look for stocks that are doing really good or at least holding up green while the market is dipping.
Yeah.
Do we sell covered calls? Not us, the mods personally, but I know Kevin, one of the members, he does because he has a lot of shares. You know, he's been trading for a long time. Us not so much, so we don't really have much in our long-term portfolios. So it's not really worth for us to sell covered calls because we don't have more than 100 shares of companies.
Yeah, I mean, if you have a lot of shares, then covered calls and selling covered calls is definitely a move for sure, especially when you know the market's kind of heading for the worst, selling calls or, you know, selling puts. One thing that I want to add about the thing that I would tell, you know, my younger self as a trader is to not be greedy and just learn how to take a red day once in a while rather than chasing and you know, letting pride come in the way.
Oh yeah, definitely. That's what happened to me. I think it was last year with Peloton. I bought the literal top on Peloton, and just it was a $200,000 bet, and I just bought the literal top because I was telling everybody it has to go up. Why? Because they just purchased. It was a cycling company, so they're an indoor stock, and then I thought like, all right, now they're going to be involved in gyms. Like now it's a whole new evaluation. It's Peloton at home and Peloton at the gym, so there's no top to this. So I just kept on averaging down, and that was my heaviest loss, and I had no stop loss, and I just let the trade go to zero, completely zero. I bought leads at the time. Yeah.
Yeah, I know those.
The day it expired, you must have been pretty happy.
Oh yeah, it was off my screen the next day.
Just like seeing the PL open. That's probably brutal.
Any other questions, guys? Because I know the Zoom meeting's about to expire soon, I think.
That was it.
I think we had an hour. Mm-hmm.
Yeah, I think maybe we can take one last question and then we can call it here.
If not, yeah, I think that's it, guys.
How do you recover from that mentally? That's a good question. How do you recover from a loss?
Especially that Peloton loss.
I mean, you kind of just got to keep going, right? Like,
yeah.
Like it's done. So.
Oh, how do I recover from the $200,000 loss mentally? Just tell myself, I started off with a $3,000 account, and I got myself to being able to substand a $200,000 loss. Like I told myself, if I got this far, I can do it again, and I've done it multiple times. You know, I learned from that, and I put it into my, I reflected into how I trade now, and I'm doing a lot better now. Like I said, that was still the first year of trading. And that's when everybody was euphoric, including myself. mentally, I stepped away for a while. I stopped trading a couple of weeks, but I came back stronger than ever, and here I am.
I think having a trading journal, especially about like what went wrong in a trade, helps in reflecting and understanding and learning how to take a loss.
Yeah, and it helps me have friends so you can make fun of it.
At the end of the day, it's gonna come down to being determined, determined on succeeding in the stock market and whatnot, and also maybe like if you had like a big loss or keep having loss after loss, just maybe try to go smaller, and build up your confidence with smaller trades, just taking one contract and whatnot,
Oh yeah, definitely. That's another thing for new traders. I would say if you're gonna trade weeklies or some swings, instead of doing a lot of positions, I guess this kind of answers one of the questions. It's less is more. Instead of doing a lot of positions, small size, do less positions, bigger size, so more contracts, so that you're able to do what I do a lot, which is trim down. Once you're in profit, let's say, take the crowd trade, for example, it was 500 contracts. And once it hits 100%, you're able to trim in half and just kind of ride it for free from there. So more size, less trades, so that you're able to either cut early or focus more on one chart, cut early, or trim and profit. Because if you have 10 different contracts open from 10 different stocks and you only have one contract of each, you're going to have a really bad time. So that's what we mean by less is more.
And then just one last question, I guess, before we wrap it up. Someone asked like small accounts. I was talking to someone about this the other day. Even if you, for $1,000, like $50 a day, like that's sick, like that's a good gain. It's just really easy to see like people make hundreds and thousands of dollars a day, and then you just feel like you did nothing. But really, like, $50 a day for a month, that you're gonna double your account in a month. So just keep it in perspective, I guess, would be the biggest thing.
Yeah, and just piggybacking off that too, like what Dan was talking about, he started with a couple grand and he ran it up to like 200 grand or something, or more than that even. You don't get there by not taking immense risk. And that's not for everyone. Everyone has different incomes. Everyone has different tolerance for risk. So, it really is up to what size position allows you to sleep at night, what size position allows you to get stopped out or have to manually take a loss and not be too turned up about it. And that's something that everyone kind of needs to figure out on their own. But you should probably start lower and work your way up rather than the other way around.
Exactly.
Okay, awesome. I think we'll end it here. And just a couple last points. I want you guys to know that we're having a sale, 30% off on our monthly and yearly plans. If you sign up by 8 p.m. with the 30% off for the sign up, you'll also be entered in an iPad giveaway. I will write down the promo code in the YouTube comment section. And thanks for tuning in. I hope you guys had a great time. And thanks, Moss, for being here and making this a wonderful live stream.
Pleasure. See you guys next time. Thank you all.
Bye, guys. Later.
Bye, guys.
Bye-bye.